for their collaboration on this call, which has had tremendous interest. I think we've had well over 500 RSVPs, so welcome to all of you as well. I also want to thank the Collaborative for Frontier Finance and the Visa Foundation, which have supported our work all year, and especially Jessica's coverage of emerging markets, small business financing, and especially COVID relief efforts. Impact Alpha, as most of you know, is a media company purpose-built for impact investing. We've had a long strong focus on gender lens investing. So this call represents the convergence of several threads. I was interested to see the Prime Minister of Norway last week said gender equality is essential for a sustainable recovery from the COVID economic crisis. That may be obvious to folks on this call. What she also said, which I found interesting, is that women's participation in the labor market contributes more to Norway's prosperity than their petroleum revenue. So that gives you a sense of what the scale we're talking about here. We're going to hear in a moment from Stephanie von Friedeburg, the managing director of the IFC, and from Nick O'Donoghue, the CEO of CDC Group. But before that, I want to briefly introduce our other guests. Quite a geographically diverse crowd, as Jessica said. And you may notice that gender lens investing is not just for women. Taku Mutasa from Development Partners International. Welcome, Taku.
Hi, thank you, David, and hello to everyone.
From London, I believe. And Alethea's Temilade Denton joining us from Lagos. Hello.
Hello, everyone. Good to be here.
And Kachi Isukane from Trade Depot, I believe also in Lagos, Kachi, right?
Correct, in Lagos. Thanks, David. Hi, everyone.
And Sarmaikar's Rabil Warek. You're always on the move, Rabil, but you're usually based in Lahore. Where are you today?
I'm in Dubai today, but okay, based out of Lahore. Thank you for having me.
And we'll have some other special guests in just a moment. In a moment. I want to encourage each of you as well to introduce yourselves. I know Jessica did this, so I see it's already popping up in chat, but just tell us your name, where you're from, and perhaps your favorite gender smart strategy or gender lens, whether that's leadership, workforce, supply chain, products and services, or community, as we'll learn. And if you're new to gender lens investing, don't be afraid to say that as well. In fact, you're the people that we're most trying to reach. So let's go to Stephanie and Nick to officially launch Private Equity and Value Creation, a Fund Manager's Guide to Gender Smart Investing. Stephanie, I wish we had a bell for you to ring like at the stock market, but in the absence of that, you have the floor in this Zoom call.
Okay, let's hope my dogs don't bark as part of the bell, but thank you very much, David. The ongoing COVID-19 pandemic has delivered a significant shock to the global economy, provoking deep recessions in many countries and taking an enormous toll on millions of people's lives and livelihoods. Our estimates are that as many as 150 million people will end up in extreme poverty in 2021. This means we may lose a decade of development gains. Recovering from this pandemic in a way that ensures long-term resilience and sustainability will require trillions of dollars to be invested and directed towards impact. Investors will be critical to creating jobs, shifting and strengthening value chains, ensuring a climate-smart recovery, and tackling systemic inequalities, such as the rising gender gaps in economic participation. Women now struggle even more than before to have an equal footing in the economy, as lockdowns are forcing women to choose between family and work. Evidence shows that enabling women's potential fully and equally with men can help grow a company's competitiveness, solidify its supply base, improve its human capital, and help build on overall enabling business environments. This is why women's economic participation is even more critical now for a resilient and sustainable recovery from the pandemic. At the same time, the business case for investors to prioritize gender equality remains compelling. The latest research from Wharton, my alma mater, shows that capital raised with a gender focus has quadrupled in the last 2 years, clearing $4.8 billion in 2019, up from 1.1 in 2017. However, this rise does not resemble the magnitude needed to fully enable a gender equal economy. At IFC, we are playing a leading role in gender smart investing and intentionally using our capital to invest in solutions that close gender gaps. Let me highlight a few examples. First, since 2006, we have dedicated financing to women entrepreneurs through our Banking on Women program, and now have a committed portfolio of $2.7 billion for SME financing for women, working with more than 100 financial institutions. Second, since last year, we have committed over $56 million in advisory and investment interventions to address gender gaps in private equity financing. More specifically, we have allocated capital to women investors, as our research has found that this can lead to more women entrepreneurs getting access to capital. As part of the Women's Entrepreneurship Initiative, WeFi, we are investing in female-led funds, such as the India Alternatives Fund, that has financed innovations, including the Indian FDA equivalent approval of a COVID-19 drug. Later, we will also hear from DPI, a female-led fund that IFC has been invested in for well over a decade. We are also prioritizing impact in early-stage entrepreneurship to address the challenges that impede women from accessing early-stage capital. Supported by WeFi funding, IFC has increased its focus on accelerators, seed funds, and incubators to have a more dedicated focus on women entrepreneurs, with investments in entities like Flat Lab 6 in Tunisia, a female-led accelerator that supports 90 early-stage small enterprises, of which 30% are led by women. We will also hear later from Sarmakar, a leading venture capital firm in Pakistan, and another IFC WeFi-enabled project. Third, we focus on investing in companies that are committed to closing the gender gaps in their operations. For example, IFC and WeFi invested in Trade Depot, a digital distribution platform that connects informal retailers with brands in Nigeria and is expected to increase access to supply chains for informal women-led retail businesses. Our work on gender is also very much shaped by our strategic partnerships. This is why we are delighted to launch this report on private equity and value creation today, together with CDC and with the generous support of the Government of Canada. The guide combines learnings from CDC and IFC's experience with over 160 fund managers and draws on best practices with a series of case studies for stakeholders across private capital markets. While directed at private equity, many of the approaches set out in the guide can be adopted by private sector investors across many asset classes. We, including everyone participating today, need to find a way to scale gender investing. We must all identify how we can create a diverse and equal workforce and a gender smart strategy across investments from due diligence to exit. And there has never been a more opportune time to do this. COVID-19 is allowing us to pursue more focused value creation strategies, such as gender smart investing, to help private sector companies sustain economies and create jobs. We hope that our new guide will be the go-to resource that supports all investors to direct capital towards solutions that drive gender equality and realize returns. I would like to thank CDC, Nick O'Donoghue for their partnership, and Impact Alpha and CFF for hosting this important conversation. David, back to you.
Thank you, Stephanie. I just put the link to the guide in the chat box. I've actually two places where it lives, one at the IFC and one at the CDC. And if somebody at the CDC might want to put the CDC link in there, you can have a popularity contest. So Nick, make the case for the CDC version of the guide. But Nick O'Donoghue, the head of CDC Group, we also have a good podcast interview which I enjoyed with you, Nick, that I'll put the link in the chat as well. But Nick, help us introduce us to the guide.
Yeah, thank you, David. Thank you also, Stephanie. Of course, it's a great pleasure for CDC to have the opportunity to work on this guide together with the IFC, and thank you also for setting the scene so well and emphasizing really the importance of what we're all doing here today. And I think for CDC in particular, this represents the launch of this guide on gender smart investing represents a really important step in our journey into gender-based investing. And that really, I suppose, was something that began in earnest at CDC 5 years ago with the launch of our 5-year strategic plan with the UK government. And one of the things that was very clear about that plan, that we emphasized very clearly within that plan, was the need to look at gender as a critical cross-cutting theme across our entire investment portfolio. And that led to the launch in early 2018 of our gender strategy. And the gender strategy was really focused on women as part of the whole corporate value chain. So we looked at women as owners of businesses, we looked at women as leaders of businesses, we looked at women as employees of businesses, we looked at women as consumers of businesses. And what was very clear was that however way you look at it, that this was a subject that that doing a better job in terms of promoting women as leaders and owners and workers within businesses was not only the right thing to do, but it was also, as Stephanie pointed out, had underlying it was a critically important business case. So that was sort of the first step in our journey into gender smart investing. And I think the second important step for us was coming together really under the leadership of IDFC and FinDev Canada as part of the 2X challenge. And the 2X challenge, I think as many of you on this call know, has successfully mobilized over $3 billion into investments that meaningfully support businesses. And I was particularly very proud of the role that CDC played in bringing together particularly the European development finance communities to participate in that. And following the launch of that, then of course we had to ask ourselves, we've got the 2X challenge, we've got certain commitments within it, we've got certain ambitions within it, but what does it really mean to invest in a gender smart way? And that led to the creation of a framework, and within that framework, some key thresholds around what it meant to have more than women in leadership or women ownership. And I think what was particularly important about that was not just the creation of the framework, but the way that framework was then taken and used broadly across the development finance community. It's one of the very early examples, I think, of the community coming together, the development finance community and the impact investment community coming together and coalescing around a harmonized set of metrics. And I think that's very important, that we can articulate in a consistent and coherent way what we're doing. So that was an important step forward. Then throughout this time, we have begun the process of really integrating gender as a key issue into all our investment decisions. So today, every investment proposal that goes to CDC, every investment committee memo, every investment committee discussion we have, gender is a very specific part of that. And we're proud also of the number of new investments we've been able to make that conform with the 2X criteria, and every investment we make is measured against that criteria. So I think overall it's a really exciting time. It's an exciting time for us, this group, to come together. It's an exciting time for gender smart investing. We want obviously as many partners as possible, and that's why I think IFC and CDC came together to create this guide, so to make it hopefully easier for people who are already involved in gender smart investing, but also importantly for all of you out there who are not involved, that you can more easily understand what it means and get involved. The funds, of course, private equity funds have a critical role to play in that. And as we look to the future, one of the most exciting things which we have recently launched is this idea of a flagship fund, where we specifically specify those funds that qualify as what we call 2X flagship funds. And I'm very pleased that in the last few weeks, DPI, who will be represented on the panel, DPI's African Development Partners 3 Fund, which is something that both ourselves and IFC long partners of DPI, But we're pleased to be coming together, and as I say, launching what will be the first 2x flagship fund. And we hope we'll have a lot more flagship funds, not only among larger private equity funds, but also among smaller and more specialized ones. And I know we'll be hearing, and if you certainly in the guide, there's a lot more examples of funds like Actis and Alethea, Fatisa, who've been leading the way in this area. So again, I hope this is going to be this session is going to be helpful. I hope it's going to be valuable. I hope it's going to be a key tool in driving greater gender-led investing and gender-smart investing in everything that we do. So with that, David, back to you and over to the panel.
Thank you, Nick. You'd think that with all the thesis and that more funds would be clamoring to jump aboard gender lens investing, but in fact, I'm told out of about 20,000 funds worldwide, there are only about 140 with an explicit gender lens commitment. That's from Suzanne Beagle's research, and I think Suzanne's on the call. But Development Partners International, as Nick said, is one of them. So I want to turn first to Taku Mutasa. Taku rejoined DPI about 3 years ago after stints at KKR and Helios Investment Partners, based in London and primarily responsible for investment opportunities in East Africa, I believe. Taku, welcome.
Thank you very much, David. Thanks, and really excited to be part of this panel, and very grateful for the work that the DFI, CDC, IFC are doing in this regard. So,
as Nick said, you've been DPI's been a IFC and CDC investee for quite a while. So just tell us a little bit about what being a flagship fund means and the sort of the firm's journey to gender lens.
Sure. Thanks a lot, David. Let me dive into it. And I think the best place is maybe to start with a quick overview. So DPI is a leading private equity firm with about $1.7 billion under management, and we invest across sort of the African continent. The firm was co-founded by Runa Alam, who's our CEO and also chairs our investment committee. And because DPI was founded by a man and a woman, so Miles Morland and Runa Alam, the culture of sort of inclusion and sort of diversity has always existed from the very beginning. And this combined with DPI's sort of long-standing commitment to ESG and impact has proven that diversity leads to higher returns. And our long-standing commitment to gender balance has led to us ultimately being chosen as sort of the first 2X Challenge flagship fund. We're very proud to be the first 2X flagship fund, but in our mind, now is where the hard work begins. And we're applying sort of a gender lens investing strategy at both a firm level, so within the business of DPI, and then also within our portfolio companies. In terms of gender diversity within DPI, as I mentioned earlier, our co-founder is a woman, and approximately 40% of our overall team are women. However, we acknowledge that there is room for improvement, and recent sort of global events and our investors, including the CDC and IFC, have really helped us to accelerate our diversity, equality, and inclusion work. So, the first step of the work within DPI was really sort of establishing a gender working committee. We've also managed to establish a formal gender lead, who is our CEO, Runa Alam. And we're currently sort of undergoing unconscious bias training. We're formalizing a mentorship program for our junior and mid-level sort of women in our organization. And very recently, our entire team participated in a fantastic gender smart investing training session that was carried out by the CDC. Internally, the other thing I'd like to sort of point out, DPI is, when it comes to sort of recruiting, how are we bringing gender and how are we focusing the way our firm works from a gender perspective. When it comes to our recruiting practices, we've managed to now make these gender balanced. So we typically ask for and need to see gender balance in the candidate pool for any of our sort of prospective roles that we're hiring for. And the interview panel at DPI needs to be gender balanced. So, the upshot of that is, look, we're very proud that our last 2 hires in our investment team have been African sort of women. And in addition, we have become much more intentional in identifying strong performing women executives and supporting them in our firm as well as at our portfolio company level. Just to touch quickly on sort of the gender story from our portfolio company perspective, this new sort of 2X flagship commitment also includes a commitment by DPI to incorporate gender smart investing with a 2X portfolio target into our current fund, African Development Partners 3. We're not changing our strategy of investing in companies that benefit from the growth of the emerging middle class in Africa. However, we're committed to driving gender equality within the firm's portfolio companies and in the markets that those companies serve. This starts really with establishing intentionality and using a gender lens filter in our analysis and in our thinking. And we're fully integrating gender smart considerations across all stages of our investment process, from origination through to exit. I hope that helps.
Thank you. I just want to emphasize and have you confirm that as part of being a 2X flagship fund, you actually make a specific commitment. I think it's written into the terms of the investment, and you're measured against certain criteria. Yes.
Yes, that's absolutely correct. So we have targets to ensure that the investee companies that we're investing in are 2X compliant. So do sort of ultimately have either an element of women ownership or very good representation of women at very senior levels within the organization and across the board. So it's something we are now actively pursuing and looking for in our investment opportunities.
And you mentioned that you think that both internally, as you said, in the team, but also in terms of looking at the pipeline and the deal flow, that there is a kind of impact alpha, as we'd call it, or gender alpha in applying a gender lens. But how does that play out, say, in looking for building the portfolio?
Yeah, so look, it's an interesting question, because as I was thinking through sort of this panel and then sort of my thoughts, I did an analysis of how many sort of women-led businesses had I looked at personally in the last 5 years, and the number I got to was quite disappointing. 5. I mean, this is against the backdrop of probably meeting and discussing with hundreds of sort of companies. And one thing I'm sort of continually challenging myself with is, why is this happening? Why am I not seeing more women-led businesses, etc.? Is it because there's too few actionable female-led management teams out there? Or is it because I personally have a bias in the way that I'm sourcing my opportunities? And I think, investing with this gender smart investing lens really puts in place very elegant checks and balances in the way that we think as investors, and ultimately protects us from some of these unconscious biases that tend to creep in. And I think by clearing this up and sort of having these checks and balances, it's really going to help achieve 3 outcomes, by improving the representation of women within our women-owned businesses or women-run businesses within our portfolio. And those 3 outcomes are improved returns for our investors, because we do believe just diversity, whether it's gender, racial, any sort of form of diversity, ultimately leads to better returns for our investors. Secondly, we believe it will drive growth in the African economies. And thirdly, we think it will unlock opportunities and improve the quality of life for women across the continent.
You mentioned your own possibly implicit biases, and also I wonder, and you also mentioned the training you had gotten, I think, from CDC. Did you feel that the culture of the firm has changed, and particularly among men at the firm?
I think inherently the firm has had some consciousness towards it, but I think the training and the structure around it has really transformed the focus and this, there's almost a sense of urgency in the way the firm is thinking about gender. You know, with many things, until something is measured, I think it's very hard to drive outcomes. And I think through the training and through sort of the direct 2x targets that we've now got within our sort of fund structures, we've created a sense of urgency around how the team looks at sort of gender lens sort of investing.
Thank you, Taku. Let's go to Alethea's Temilade Denton. I imagine, Temilade, that Alethea has looked at quite a bit, many more women-led companies. But tell us a little bit about how Alethea applies a gender lens and what the story of the firm is.
Thank you. So Alethea is an interest-focused fund. Alethea IDF is
Temilade, we're having a little difficulty hearing you, so.
Can you hear me clearly?
Yeah, that's better.
Better?
Yeah.
Okay, great. So Alethea IDF is a gender-focused fund. Gender itself is the consideration for our investment strategy. It's a fund that was started by Tokumbo Ishmael and Polo Leteka, two private equity funds based in Lagos and in Johannesburg. And really the underpinning ethos of Alethea IDF and what we seek to do with our idea of impact is to create accessibility, affordability, and inclusivity for markets and for people. And so in considering this, in developing our gender-focused fund, what we did was we set out with the intention to find women where they are, and then create a strategy around that. So what that means, in more practical terms, is that our investment strategy, for instance, has a sector focus that, or our priority sectors are informed by sectors where women are most active as suppliers, or in the value chain of the business, or as producers, or even as consumers. And so that gave rise to, for instance, agribusiness being one of our focus sectors. But it also influences the stage of our investing, because what we see is that a lot of women-owned or women-focused businesses don't have access to institutional capital, and so they're kind of stuck in the missing middle, and that also informs our stage focus. But more generally, with the way that we apply our lens, again, in being as holistic as possible, we look at businesses that are either women-owned or businesses that have women as a significant part of their employees, or businesses where women are participatory in the majority sense in the value chain. So that could be either as producers, distributors, suppliers, and we also look at businesses where, or opportunities where women are the significant part of consumers, because that is also economic power that needs to be recognized and harnessed. So in that sense, it is very broad, and deliberately so, because we are intentionally walking around the structural barriers that are in place and endemic in economies, especially like Nigeria and South Africa and other markets that we are active in, that keep women, for instance, from owning businesses, which is why, you know, we see fewer numbers of women-owned businesses, or keep women from you know, registering. There are all kinds of structural and systemic issues that we try to walk around by the way we have designed our strategy. And so this is how we have articulated our lens. And what we do is we we're also a value-added fund. So we are not just providing capital, we are also, especially with our gender lens, expanding markets and increasing or improving social as well as economic outcomes for women wherever it is that they are.
Temilade, there's a lot of indicators that women have been disproportionately affected by COVID shutdowns, and by extension, I would imagine if you're investing in firms that are serving women in particular, that then the firms would have been particularly hit as well. So what are you seeing in that regard?
Well, for women, okay, so we did see a lot of, and you know, the effects of COVID have been quite almost destabilizing, but also creating opportunities for many businesses. So we did see a lot of supply chain disruption, for instance, in our manufacturing focused opportunities, but also what we saw was, and this is actually one of my, and I'm just going to pivot to make this point, what we also saw was a re-strategization, and we were able to work with our companies to do this, where there is supply chain disruption, to then almost then deliberately increase the local capacity and the domestication of those supply chains, and then intentionally bringing in women to the supply chains where possible. So for instance, with one of the businesses that we are investing in, they produce a crop that was, or they process a crop that was formerly imported. But now what we had been working with them to do even before COVID was to domesticate that supply chain by providing funding to women who would be able to grow the crops locally. And so it's for mangoes, and mangoes are not typically grown by women in Nigeria because the trees are too large. It's a capital intensive business, it's manual intensive. But what we then did was, you know, support research for a variety that is more manageable, that for women to farm, and you know, provide capital solutions so that women actually have access to an aspect of production that they were precluded from, or you know, barricaded from previously. So it's these kinds of gender smart solutions, both for the business and especially using women to deliver those solutions, that we have been implementing as a general part of our strategy, but especially in response to COVID.
Because thank you. The question comes up whether applying a gender lens gives you resilience to risk, or actually is an additional risk factor. And this is both in reality and also in the eyes of LPs, and how that plays out in your fundraising. So how do you see that?
No, it's absolutely a resilience factor. And I should mention that we are also and my actual particular role is ESG and impact. So you know, marrying those two together, there is a very deliberate, and the truth is that they are not mutually exclusive. It is true that women are the most negatively affected by COVID. It is true that they are the most vulnerable. It is true in that sense that if you do not protect and engage and empower and strengthen their role, the system is overall weaker by neglecting their position and their participation in the economy. So that's how we look at it, and that's how we proactively design solutions to build resilience, to build sustainability in our investments.
Great, thank you. Let's switch to Kachi Izukane from Trade Depot. Kachi, I'm sure you can do a better job than I explaining what Trade Depot's business is, but also just explain sort of the firm's journey and how you think about gender in the business.
Very well, thanks, David. So Trade Depot provides a digital supply chain and inventory finance platform for SME retailers in emerging markets. We're largely focused on the continent in Africa at the moment. We're in Nigeria, Ghana, and South Africa. The platform empowers these SME retailers with access to inventory at better prices by connecting them directly to the manufacturers, as well as access to credit, right? Now, on our journey, so today, the story, it's clear that three out of every 4 micro retailers or retailers that you service are female owned or female led, right? But this wasn't this clear to us before we got in. We kind of found this out as we went on. Anecdotally, one had encountered, living in this environment, you're familiar with the fact that the typical store you walk into, especially the smaller stores, right? You tend to find them to be female led. But the scale became clear when we were dealing with quite a few of them. Today, we service about 48,000 of them, and about 75% are female led. But what's also interesting is that even though you have this overwhelming percentage of them being female led, the dominance of the female led stores tends to be in the smaller stores, right? Or in the stores that generally seem to have less access to capital. Right, so if as you go up the ladder, as you go up the pyramid and find the more funded stores, you tend to find more of male participation. But the most vulnerable of these stores, or the stores with the most working capital gaps, tend to be largely female owned. And so, from when this became clear to us, it was apparent that first of all, to be successful as a business, we need to take this on board as a feature, right? We need to build for a largely female-led customer base, which there are a few specific things in the way you think about the things that hold them back, in the way you think about servicing them. I'll use the financing product that we've now rolled out for the lenders as an example. So we see that overwhelmingly, a lot of these parties have never taken a loan before. There simply hasn't been a basis for them to qualify for a loan. And if you use the typical basis for credit scoring, they will struggle as well. But we found that making them customers of our digital supply chain platform and then using their order histories as a means for credit scoring allows you to get so many more lenders in play. In fact, we find that about 85% of all our borrowers are first-time borrowers. It's the very first time they're getting access to any form of finance from any parties.
And so the changes you made to serve the women shop owners turn out to be generally applicable and bring in more borrowers and lenders broadly, right? You've designed it for women, and it becomes a general advantage in the business.
Yeah. So it's a general advantage. There are a few key things that it does, both for us and for the customers. Now, the size of our business is really a function of how big the businesses of our customers are, right? So by giving them access to credit, we find that these stores are able to buy more, which generally is great from a top line standpoint. But what is also very interesting is that they buy fewer times, which from a logistics standpoint is just better, right? So if you have enough capital, it allows you to increase the volumes of your purchases and buy even more times. That makes for good business. I think a couple of the things that have changed in the way we go about this over the last 4 years has been, and I think Taku made this point, has been the intentionality, really, right? Taking this on board and then focusing on the fact that, look, you're targeting to have you're going to have this number of female-led retailers on your platform. you're rolling out a lending product and you want to make sure that at least this percentage of these loans go to female-led retailers, makes you start building everything you're building to take this on board and end up with a product that, smartly is inclusive.
And what about at Trade Depot itself? What have you done to increase the diversity in the leadership there?
Very well. So a few key things. We started out as 3 co-founders, all male, right? But from the get-go, it was clear to us that we needed to get the balance right for various reasons. But it just makes for a better working environment, and it helps us generate the right level of empathy to service our customer base in the right way. Today, we've grown our senior management team is actually 60% female today. In fact, we have roles that you typically not find as female-led for our head of fulfillment operations. Some of the core, even more technical roles are female-led. Funny enough as well, there was a feature done on one of our drivers on one of the news networks about a couple of weeks ago on a female driver, right? Explaining what the journey is for her in an environment that traditionally doesn't have that as a, that role seems to be seen as a male role. But these are the things you kind of become very deliberate about, right? Like when we are bringing drivers on board, there is actually a diversity target that the HR team has for a percentage of the driver base at least that needs to be female. But we find that when you're servicing a market that is primarily, female-led retailers, taking these things on board is just good business.
Great, thank you. Let's switch to Rabil at Sarmayakar. Rabil, you told me in our conversation that you were nudged into a gender lens strategy. So tell me a little bit about how the IFC's role, how the IFC brought you along.
Sure, thank you, David. I think just by way of background on Sarmayakar, it's a Pakistan-focused early-stage venture capital fund that invests in businesses, startups that effectively leverage technology for scale. Now, given the geographically focused investing strategy, we're also faced with another conundrum for which I need to lay a little bit of background, which is Pakistan and the tremendous gender imbalance in the country. Of the 220 million population, roughly 49% is female. But we rank amongst the lowest 10% countries in terms of the World Economic Forum's gender gap index, for example. And what's the reason? Because cultural and societal norms just stigmatize working with male colleagues in certain instances or in male-dominated industries. And what that results in is actually an employment to population ratio of females in the country of only 20%. And compare that to males, which is closer to 70% mark in the country. Now, even females that are employed are actually very imbalanced in terms of what they're actually doing, because most of them tend to be in the agriculture sector, whereas craft and some of the other trade industries see less like low teen-digit number participation from females. If we look at entrepreneurial activities in the country, we look at which businesses were getting financed, again, we see a similar picture, which is single-digit percentage by number of businesses that received early stage financing across the Series C, Series A stages in the last 4 years were led by females. The challenge there was that this was not because these women weren't getting educated or they weren't talented. In fact, we have, by some estimate, about 500,000 graduate women that are unemployed in Pakistan right now. And this is again because of either this post-marriage phenomenon of being a doctor bride where you've done your doctorate degree, but just sit at home because your husband is not comfortable with you working in an environment with male colleagues. So both of these were, again, considerations that we wanted to tackle, but given the geographic focus of the fund, what was not clear, how the two can be brought together. And that's where the IFC played a very pivotal role in helping us establish a bit of a framework in terms of how we can go about addressing this gap. And there were two key pillars of this. One was either to direct more capital towards these businesses, or within businesses that might be led by males, but could address certain business models where income generating opportunities could be created for women. I'll share examples of these, but after some extensive work with them, and again, together with VFI's really nudge, if I may repeat that word, in looking at a gender lens while keeping the Pakistan-focused investing strategy in place and not replacing the commercial viability or attractiveness of the opportunities we were looking at, but within those, look to enhance or improve the gender gap that existed, both for our fund level, as Taku gave an example earlier, but also at the portfolio level. And what we came up were three primary considerations which we were looking to address. And the first one was just have a certain proportion. So there's a certain target percentage by number of investments that we're looking to do, which are going towards either female founded businesses or businesses that have at least one female co-founder, or where the CEO is actually female. The second layer is at the governance level, which is female representation at the board. Again, this has a specific percentage by number of investments that we want to do. And this is a higher number compared to the first metric, given that this should be easier to implement because it's a very, very low threshold. One female board member, this should not be very difficult to do. And then the third lens, there was really female involvement at decision-making, even in our own fund. And over there's two different layers. One is, of course, the investment team itself, but also we have, similar to an LPAC, an investor advisory board, which has representation from some of the larger LPs, to also have female representation over there. I want to share some examples of how we went about addressing some of these different avenues. And maybe I should start by mentioning that IFC's representative on our advisory board will soon be a female, previously was male. So that's a great start. And thank you, IFC, for doing that. But what we've done sequentially is both looked at existing businesses that were there in our portfolio and started replacing some board members or encouraging female representation where hiring was being done for, in one particular case of a CEO of one portfolio company that was, again, a female that was brought on board. And all of these are, again, measured on a half-yearly, then again, a yearly basis to assess if the pipeline of opportunities that is also getting created is commensurate to hitting some of those targets. And that means also going into the ecosystem to promote just general women entrepreneurship, participation in events, in kind of avenues that make entrepreneurship a viable career choice for females in Pakistan. And that, of course, is something which involves a much broader effort. So to quote two specific examples of the types of companies that we've invested in. One such business is called Dot and Line, which is both founded by two female founders and actually addresses a very female specific consideration, which is of female educated women who can create after school tuition academies in their own home and be connected to kids in their vicinity that can just come over to them and actually from a centralized curriculum actually get tutored. What this addresses is actually most males are okay with their women teaching young children in their own home. So what this does is it just leverages a business model that allows that participation, that allows this company to actually exist and build this network of female teachers, which are all connected to the platform and can be connected then to the underlying students that can then be matched up and go on. Another example is actually from a very different segment of the economy, which is one of our portfolio companies called Bikeia, which is the largest motorbike network in Pakistan, and does a combination of both ride hailing, deliveries, even cash conversion to digital. A very heavily male dominated industry. In fact, women don't really ride on bikes, particularly not behind strangers in Pakistan. Very different to how it's in Indonesia, but in Pakistan, it's just not the norm. So what we worked with the company was to actually engage home-based call center operators, which were only female. And these females were picking up the GPS coordinates of the riders, and for an offering which was also offline, didn't require smartphones, you could just call up a number, and that matching was being done by these homebound women who were, not homebound, they were stay-at-home women who did not have to really leave and go to an office or go through what are really challenges in Pakistan around transportation or just general commute and access to workplaces. And that way we were able to add a significant number of employees to this company Bikeia, which were previously, I would say, almost 97% male employees within that company as well. So both of these are again just examples that I wanted to share where it's not limited to just having that one female at the top of a company and investment going in and that checking a box. I think there's many different ways in which we can incorporate additional participation. And all of these things, frankly, were not possible, or we were not even aware of them without having had the benefit of IFC and VFI involvement. And ultimately, the reason why we're wanting to do this is we believe that returns can be enhanced by just incorporating more females in these companies or in our portfolio without having to change the fundamental strategy of a Pakistan-focused lens.
Terrific. Thank you, Rabil. As I feared, we are approaching the hour. We're going to keep going. Obviously, if you have to leave, leave. But I want to now start opening this up, the discussion. So, and we have several other fund managers who I will bring in a moment. But first, I want to go to Laurie Spengler, an old friend who's is both on the board of CDC, I think also on the board of Development Partners International, and also working with, okay, you can correct me, but also working with Collaborative for Frontier Finance. Yeah. And I just want you, Laurie, to just reflect on what we've heard and also where it's going. And I've got a specific question about that in a moment.
Super. Thanks, David, and happy to be part of the conversation today. I did want to play back a couple of takeaways and then go to a few of the additional trends that we're seeing. In addition to my advisory role with CFF, I'm also an advisor to the Gender Smart Investment Summit, and Suzanne's on the line as well. And then I wanted to make an appeal, if I could, to be a bit provocative. So I'll do it quickly because I know we're in the interest of time. But I thought on the takeaways, what I heard, what was very exciting, is that we're moving from the why to the how. And I think Stephanie kicked us off that way. The case, although we can continue to bolster the case of why, has been made pre-COVID. Of course, the COVID experience is strengthening the case, but now we're really focusing on the how, which I think is quite exciting. We've heard the gender across the value chain, which I think that whole value chain perspective, which is grounded in some strategies, really resonated. External and internal combination. You can't do this externally if you're not doing it internally. That's just the reality. And we certainly experienced that at CDC. So let's just be clear about that. Fourth, whatever your starting point is, whether it's more defensive from a risk perspective, David, as you invited, or offensive as it's your explicit strategy, those things are fluid. So pick your starting point and inevitably it's going to influence. If you start more defensively, it's going to influence more of that offensive, proactive strategy, which I think we heard several examples of. And then the last one, which came up a lot in the chat, and I want to make sure we acknowledge it, there's a recognition that women have to be part of the decision-making here for this really to have lasting effect. And that came up in several of the speakers, but also it was quite a vibrant commentary in the chat. And that word intentional, Taku, that you said at the beginning, I think came up several times in some of the comments. So that's just a playback, David, for some of the things that really resonated, but it feeds to what we're seeing as trends. That holistic approach, whether it's value chain or even more expansively, that's actually what's taking hold here, because gender shouldn't be siloed as you think about it in the context of building equity and equitable societies. So that holistic approach. Innovative structures, a few examples on the call today, but we're seeing more and more of that. Myth busting about sectors, love the ag production example. So this is not about women only playing in certain sectors. We're seeing it in transport and logistics and infrastructure and agricultural production and other things. Asset classes. So we've talked a lot about private asset classes on this call, but the gender lens application is across the asset classes. Super exciting to see. And then I think that what was missing a little bit from our conversation, which leads to my appeal, is really ensuring we're focusing on the demand side of the equation. What's happening on the ground in people's lives? And ultimately, the supply of capital should be responsive to what people need, what's useful, what's relevant. And that's actually, I think people know, that's where the Collaborative for Frontier Finance really focuses its work. And my appeal is to make sure that with all of this great momentum, which is fantastic, we resist the cluster effect on things that are of a certain size, the cluster effect of things that are familiar, and the cluster effect that things that have a track record. All important, all good, but let's challenge ourselves to pull beyond those clusters and make sure we're really going deeper, local, proximate for relevance, looking at local capital providers who have that market knowledge and that relevance, some of whom we've heard today, but there's a big constellation and a growing constellation. They may not have the track record, so I think we really have to make sure we're pushing and being intentional at finding those opportunities, because there's a burgeoning growth universe of them. Information from CFF is widely available. Also, the gendersmartinvesting.com website is quite a good place for information.
Terrific, Laurie. You always fill the bill, which is what I wanted to bring it all together. The question was going to be exactly that, which is how can gender, how is and how can gender play a role in the COVID recovery, and such that this capital ecosystem is different on the other side, and what are the one or two key things that folks should think about as the rebuilding and the recovery and the relief efforts proceed, to make sure that it fulfills all the goals you were talking about.
Yeah, well, I'm happy to kick off and then invite others. I know we're right at the hour, so we're switching into.
Well, let me actually, before you say that, we do have a bunch of fund managers, including a bunch from the Collaborative for Frontier Finance, where I'm going to introduce them immediately following, and then we'll have the discussion. So again, we're at the half hour, at the end of the allotted hour. If you do have to leave, obviously that's up to you, but please stay. There's plenty more.
Yeah, and I mean, I would kick off by just doubling down on two of the things that I said, David. One is that I really do think we have to.
Uh-oh. Laurie is frozen up. All right, well, that's maybe a sign. Let's move off. Laurie, we can come back.
Challenge ourselves to make sure we're seeing what may not be visible.
Okay, I think folks might have missed some of that, but we can come back to that. Okay, so again, this is now what we would generally have as what we think of as the after party, where folks can hang out. But instead, I'm just going to keep rolling. Again, everybody has to manage their own exit from this. But we have, and let me again go through and thank you to Drew and Laurie and others for introducing me. We have, and apologies if I mess up the names, but Thelma Ekior from SME in Nigeria. Thelma, welcome, hello. And let me just introduce a few more folks that we can come on as well. Kushi Nisi from Secha Capital in South Africa. I got that close, Kushi?
Hi. Yes, close, David.
Close, okay.
No problem.
I think we have Maureen Sibanda from Wukino, who's one of your portfolio companies. And then we
Hi,
also have,
everybody. Hi.
There you are. Hi. And then Wakioro Juguna from Heva Fund in Kenya. Wakioro, are you here? She may have left. So in any event, Thelma, I know, just tell us a little bit about SME and tie it to some of the themes you've heard here.
Thank you, David, and thanks to CFF for inviting us. I hope you can hear me fine.
Yes, fine.
Okay, so SMENG, we're an impact investment platform that focuses on investing in women-owned businesses. We are women co-owned and led, and we're deliberate in our strategy. We're sector agnostic, but we target sectors where women predominantly operate, and also sectors where sectors that have been male dominated and women are making inroads. We also support women-owned businesses that provide goods and services for women and or girls. I was happy to hear from the report IFC mention accelerators and the importance of that. For us, that is central to our work. We invested in our own accelerator called She Works Here, as to answer the question that every investor, I was a donor first, would say to me, we can't find good women-owned businesses in Africa. And so through our accelerator, we've created a very strong pipeline and have very good businesses, investable businesses, currently 200 businesses in our portfolio. To disprove that idea that there are no good women's businesses. And in doing that, we're also committed to strengthening the ecosystem. We know that if the ecosystem is strong, capital will flow more into Africa, and more women-led funds will be supported. Importantly, I'll just say two last things. Women-led and women-owned funds are important to this conversation of gender lens investing. It is in the IFC and CDC report. And I was happy they highlighted it because it provides a symbolic representation of women that doesn't exist, particularly on the continent of Africa. And so it goes to break the stereotypes around women handling money and women in leadership. And a lot of our portfolio companies have actually said to us that having a fund that's led by women is encouraging and almost validates the fact that they can access financing. The second point I want to make is it's easy in theory to talk about gender lens investing, but it's actually difficult in practice to do. So there are all these commitments about 2x and all of that, but it's been difficult to trickle down and get down to the actual funds. For example, I was happy when Laurie said she got caught off, but she was making an important point around, gender lens investing being contextual and reflecting the realities on the ground. And that is absolutely true. Something that needs to be tracked and monitored vis-a-vis gender lens investing in Africa is the emergence of first-time women fund managers and how critical that is to strengthen the ecosystem. There's a tendency with DFIs and other investors to keep financing the usual suspects. But gender lens investing in its very nature is about systemic change. And so the financing that comes through has to change a system that has historically discriminated against women. And that means being courageous enough to look at first-time women fund managers and also look at the growing emergence of women-led funds on the continent. I think this is an important point that hasn't been said. I didn't want to focus too much on what has already been said.
Thank you, Thelma. That's a very important point. Kuli, maybe you can give us very briefly about Sesha, but I also want you to introduce Maureen and how the portfolio decisions have played out.
Yes, sure. So thank you so much for having us, David. So I'm with Sesha Capital and we are an impact investing fund. And we invest in SMEs. Our first fund has been in South Africa and our second fund is going to be SADC focused. I think in terms of our approach, I must say that we have prioritized diversity and then focused on investing in markets with inefficiencies. And surprisingly so, that resulted in a portfolio of more than 80% female founders. which has been a really interesting journey for us. Markets that we term boring, the missing middle, resulted in this big portfolio of women. And I'm so excited that we have Maureen here. She is part of one of our investment companies, and I'd love for her to share, the impact that she has seen on the ground by running a company that is driving women empowerment. Maybe let me pass on to Maureen to share about Wikina.
Hi, everyone. I'm Maureen Spengler from Wikina. Wikina is SA's first networking company that empowers women to sell Brazilian and Peruvian hair and to start up their own businesses. So they can sell as much hair as they want without having to worry about inventory and couriers and delivery. Their main focus is just to make sales and earn commission. All they need to do is register to become a reseller. Many South African households are women-led. Wikina has helped these women have an income through networking marketing, and our main target audience is women in remote areas and rural areas. Reason being, women in remote areas also want to look good and start their own businesses, but due to lack of resources and have no access to major cities, they're unable to do this. So Wikina handles all admin for members, including shipping to any location in South Africa, which is all remote areas across South Africa. We handle all content creation, website management through a company called NetReady. So all women need to focus on is just making sales. And during COVID-19, we realized that so many women lost their jobs, and Wikina has helped women raise an income on a monthly basis. During the lockdown, we've managed to sign up over 800 women who are currently active in the Wikina community. And Wikina women age from 18 years to 40 years. And example, working class women find this great because they get to have a second income by simply selling hair to their colleagues. So Wikina, and not only can you make money through commission, but you can also recruit women to join under your downline, and you earn commission from your team members. And Wikina basically aims to empower women and wants women to empower other women. That's how the Wikina structure is set up.
Maureen, would you say that the gender focus, both of the company, but also the customers or the resellers, was an advantage in fundraising or a disadvantage?
I think it was an advantage because women always want to look good, and there are so many women in South Africa. So why not offer this to them for them to make money through selling to their mother, friend, church member, cousin? I think it was an advantage for us.
Great. Thank you both. I do want to also just bring on and acknowledge Graham McMillan at Visa. I don't know, Graham, are you on? Visa Foundation, which Graham runs, has made a very explicit commitment to gender lens investment. I'm told actually it may be the largest foundation in explicit commitment. I don't know if I have that right. I'm always one of the largest, let's say. Graham, you may have had to jump off.
Can you hear me, David?
Oh, there you are. Good. Yes.
Sorry for my technology challenges.
So you got the board and you got the board to approve an explicit gender lens commitment, which is relatively rare.
We did. So just about 3.5 years ago, Visa created the Visa Foundation, and obviously we have this a mandate to have a public good, of course, and more specific than that, we've been focused on small and micro businesses since our inception. But it really became clear when really over about the past year and a half, that for us to have a focus on gender equity made all the sense in the world for our stakeholders that we engage with, for our brand, for our business, for our employee. I mean, the list goes on and on. So the being explicit around gender equity at the center of both the allocation of capital through investment intermediaries, as well as the benefit to the underlying enterprises is effectively the central thesis of what the foundation will be doing over the next 5 years through what we're calling our Equitable Access Initiative. And really what that expression looks like is a $200 million commitment. Roughly 60 million of that will be in grant capital to support the ecosystem and a lot of the NGOs that are fundamental to ensuring that these enterprises are successful. And that, of course, the allocation of investment capital in the form of a $140 million commitment, largely through a private market strategy to support the enterprises and the fund managers, that forms the basis of our commitment. And so we are now, thankfully, in the phase of execution. It's no longer design and discussion. The board has bought in. Our investment policy statement reflects this. The team largely is in place. We are pleased to have a new head of investments, Nyada Kumbuli, who was came to us from Calvert Impact Capital, who has a tremendous track record, as many of you know, in allocating this capital. So we're really excited, and it's a journey that some of you have already joined us on. So I see a few familiar faces. But I think the message that I would just share with everybody is we're fundamentally trying to be the puzzle piece that fits into a larger picture here. We recognize the tremendous work that so many others have done, and we are in a privileged position to allocate capital to support those efforts, and also put wind in the sails of the work that so many are doing because of our brand. And so where we will support early managers, first-time fund managers, and how to go about doing that, a lot of which has been covered, but also to put capital to work in established efforts, and also to invest in the ecosystem where it's needed. So that's really the commitment that we've demonstrated. And two examples of what we're doing right now. We have fortunately signed up in an agreement with the Development Finance Corporation as part of the 2X initiative to invest $25 million of our capital alongside DFC's pipeline. And then we have launched, some of you may have responded, a request for proposals to establish what we're calling our Learning Lab in support of this Equitable Access Initiative over the next 5 years, to be really transparent, to support our portfolio organizations, both grantees and investees, as well as support the larger ecosystem efforts underway. And I think the last thing I'll just say, in real appreciation for the work that so many others have done, our fundamental criteria by which we will even consider either a grant or an investment is anchored in 2X. So that is the framework that we use. And of course is a recognition that companies and other organizations are on a journey. But certainly having that framework, allowing us to just plug and play with that, has been tremendous. So many thanks to so many of the folks who are on this, who've contributed to the development of the criteria. And now what we hope to see is the rolling out of that criteria across some organizations.
Thank you, Graham. Yeah, that's been something that's been interesting to me, is just the extent to which now the commitments have been actually codified and made explicit, and people are not only pledging to them, but all then accountable to them and reporting out on them as well. And then the last person who I just want to bring on, and you mentioned Calvert, but we have Lee Moran. Calvert's mostly a debt investor, so that's a different perspective. Most of what we've been talking about has been equity investments. Lee, are you still with us?
I am. I'm still here, David.
You just have some thoughts about how you apply a gender lens and what it means in debt financing. And you mentioned that you had some data on performance, and that might be interesting.
Yeah. And so, as you mentioned, Calvert is a debt investor. And Graham, I have to say, Nyada was my neighbor at Calvert Impact Capital for about a decade. So missing her terribly, but thrilled for what she's going to do at Visa, and allocating all that capital with a gender lens. And yes, David, we do have a bit of data on the business case. And I think that what Laurie mentioned earlier is really important. We're moving from the why to the how in gender lens investing, and the how is really, really important. And we've been really focused on that at Calvert Impact Capital. But what we also found is that sort of outside of the world of very committed impact investors, the business case is still something that people are really interested in. And that I think the development of gender lens investing is still really, it is a function of the quality and the availability of data that we're getting outside of sort of the bubble of people that we're talking to now, which is growing and growing with and without the impact case. So one thing that we did look at was our own portfolio over about 11 years, and it was about $23 billion in cumulative assets under management. Excuse me. And we looked at the relationship between financial performance and specifically women. Sorry, I'm losing my breath here. And women and gender diversity at the leadership level. And what we found, we did that specifically to mimic a lot of the public sector reports, that had been published that showed a positive relationship between gender diversity at a leadership level and financial performance. And what we found was a very similar thing. Similar to that, we found that there's a relationship between more gender diversity and positive financial performance as measured by several different metrics. And that was really important for us because we can take that data now and say to a lot of our portfolio partners, this is relevant, and it's relevant because you can see yourself in this data. So what we got was a lot of responses from people who said, yeah, the business case has been made. It's been made in a very compelling way, specifically in public markets, but in private markets, specifically in the private debt markets that we work at, a lot of our portfolio companies, especially several years ago, said, that's great for Fortune 500 companies. I'm not a Fortune 500 company, right? So where do I see myself in this data? So I do think it is important to continue, analyzing and sharing data so we can continue to really build and advance that business case, but agree that our focus should really be on how. And I do think that, just again, to reinforce something that the point that's been made several times on this call, that gender is, whether you acknowledge it or not, it's ever present, but it's very nuanced and it's very contextual. There's no one right way to do gender lens investing. It'll look different, as you're saying, David, whether you're a debt investor or a private equity investor. It'll look different depending on the markets that you're in and the sectors that you're in and what your goals are as an investor. And I think it's really important that this community keeps standing up and acknowledging, I am a gender lens investor and I do it this way. There's no one right way to do gender lens investing. There's only one wrong way, and that's to ignore it entirely.
Okay, great. Well, thank you, Lee. One of my takeaways from this call has been how many men, including myself, frankly, have participated. When I was starting to sort of cover gender lens investing, I went to a few of gender lens conferences. Joy Anderson at Criterion was a pioneer. Suzanne Beagle. I was often one of maybe a couple or three men in the room, and now, as you can see, not only in the room but speaking and leading, and so that is quite interesting. I'm going to take a little step back. Jessica's been monitoring the chat a little more than I've been able to, and she's going to pull together a few of the themes and the questions. But at this point now, if you want to actually just pipe up from the participants, I'm gonna sort of relinquish my moderator chair and open it up. So Jessica, why don't you just sort of round things up a little bit, and then folks keep jumping in and keep the chat going. We'll leave this room open for another 15 minutes or so to let folks share contact information and other things. But I'm going to sign off. Thank you to everybody who participated, and certainly to the speakers and to the IFC and CDC and Collaborative for Frontier Finance. And Jessica?
Yeah, hi. So we've had a ton of good questions coming in through the chat. One of the ones, the recurring themes that I've spotted in here deals with implicit bias. We've seen a couple of questions from a couple different angles, so I'll just put a couple out there. One is asking about what credible initiatives there are to remove gender bias and support more women and first-time fund managers. I think Laurie, you spoke to this a little bit, also Thelma, about the need